the market gaining just over 1/3%. Can we say that the bulls are back, or is it too soon to tell?
Yeah, it's too soon to tell. What we've seen in the past 8 days has been nothing but incredible. Basically, we've seen the market lose as much as 200 billion. We've seen the NSE, ASI lose about as much 12-month lows. The banking sector index reaching 2-year lows. It's nothing but incredible. I think it's just too soon to think a day's gains in the market really is to mean that the bulls are back. I simply believe that there are some investors out there that are picking bargain stocks at the moment. You mentioned GTB, and if you consider GTB trading at about 8.5 times earnings compared to a banking sector average of 15 times earnings, really the stock is trading at deep discounts. So I'm not surprised when you see investors coming into this market today.
In recent days, the jitters in the market was largely to do with the September deadline on the rescued banks looming, whether they'd be recapitalized, and then the surprise action of nationalizing 3 of those banks. What impact has that had on the market, and particularly the fixed income side?
Really, it was a shocker. I remember hearing the news and I thought, oh no, the market is going to sell off. Coincidentally also, we've seen issues in the US as well as in the Eurozone, all happening around the same time. Particularly in the fixed income market, what we've seen is we've seen flight to quality. We've seen investors moving from equities into fixed income, even though that seems to be dying down gradually. We've also seen a lot of the smart money investors coming into the fixed income market. Therefore, you're seeing rates in the interbank market, money markets, fall. They're falling sharply. Right. You've also seen increased open market operations by the CBN. By implication, what you have there is rates in the Treasury bill market going up slightly, and also we've seen that the bond markets really have remained flat across the curve.
Absolutely, and that's I think reiterated by recent reports that, for instance, the Debt Management Office has only managed to raise debt up 7%. It hasn't raised the kinds of figures this half of 2011 as it did at this time in 2010. What's your outlook for this particular segment of the market going forward?
We're hoping that with the appointment and resumption by Okonjo-Iweala, we're expecting that there will be fiscal consolidation and discipline. We expect the issuances to be as budgeted in the calendar, not to increase further. We expect to see yields fall across the curve for 2 reasons largely. The demand is there, also the liquidity. If you consider the fact that AMCON has injected about 520 billion into the 3 rescue banks, really the AMCON bonds are potential repo instruments that these rescued banks or these nationalized banks can make use of. Additionally, you see demand from investors in the fixed income space. You've seen demand outstripping supply of government securities by about 200% at times in this market. So we see all those inflows chasing the limited securities available. Yes, we do expect inflation to remain a threat. We do expect the CBN to increase the MPR in the coming months. However, what we have seen happen is as the MPR is increased and yields go up in the immediate term, over time yields tend to trend down backwards, to trend downwards, and basically we think that's a trend that we're going to see going forward, unless we see loan growth increase in this market, unless we see the banks lending again. We don't think that much is going to change.
So then what should portfolio managers be doing just by way of approaching the market under the current situation?
Well, obviously, it depends on the portfolio and the funds. For an equity fund, basically, where you have a high beta portfolio, we expect portfolio managers to be using the rallies to sort of sell out of their volatile exposures, to be buying into defensive positions. I would expect that they will be reducing their banking positions for those that are overweight banking. I would expect that they will be buying into the consumer space. They'll be buying the UACN, Ashaka Cement. They'll be buying some of the top flight names in the banking sector as well, probably GTB like I mentioned earlier. In the fixed income space, I expect the fund managers to probably maintain a barbell strategy. I expect them to be overweight in the long end of the curve as well as the short end of the curve. And I think that's the way to go, really.